Well, for what it's worth, the last I checked, the SGX Nifty was trying to hold its head above water. Let's see if that situation is still the same, about 30 points up. Don't know if that really plays out at all, but anyway, it's for reference on the screen. Let's take the conversation to Anand Tandon, who's joining us. He's a fundamental expert on the show this morning. Anand, good to have you on, and good morning to you. We live in very, very interesting times, right? Never thought would be seeing so many crises in, in a span of, 20-odd years. But you tell us, I mean, how would you look at the market right now? Would you start putting some money to work, or would you stay on the sidelines and wait for things to settle? How would you approach a situation like this?
Well, Surabhi, thank you for having me. Broadly, if you see what's been happening in the US, it's essentially now for the first time the effect of interest rate hikes are becoming visible. In India, we haven't seen that yet. So from that perspective, I would argue that the markets still need to react to the fact that the interest rates have moved up. We have begun to see that only marginally, for example, in the mutual fund industry, where the SIPs have been rolling off and new ones are not coming in with the same kind of volume. And the move towards debt has started. The question is, how will that affect valuation? I've been arguing for a long time that in a rising interest rate scenario, PE expansion is not possible. In fact, contraction has to happen. And you are beginning to see some of that happening. Unfortunately, if you look at the sectors where the growth is given, which is essentially sectors like banking and finance, to some extent capital goods, and perhaps even consumer staples, etc. All of those are still trading at much higher than what they have in the past. So from that point of view, I think frontline indices will have a struggle, at least for the near term. With that kind of context, I think you still have to look at only those companies where there is growth that is more visible than not. And again, it comes back to these same sectors. So it's a question of timing. I think the market has given up most of the fluff. We have to wait perhaps just about a little bit longer for you to start looking at buying aggressively. For now, I think, as you mentioned, you could start nibbling around. But, it's always better if you are looking at trying to time it to wait for the market to rebound before you start actually putting up serious money.
Got it. The other big headline, right, and it's a real concern now, is this El Nino effect and the impact it would have on monsoons. Now, there are two global weather bodies that have declared a watch on El Nino and perhaps the likelihood of it arriving by July of this year. And on stocks like, say, M&M, for example, it's already lost 10% of its value this year, perhaps in anticipation of weak tractor sales. Your thoughts? Would you use this as an opportunity to buy into some of these names?
I think I would. I think, my bet at least is that, even if the crop volumes are not as much, I think the prices have gone up considerably. If you look at, for example, the MSP that the government has announced versus the kind of market price we are at, you would argue that there's going to be less procurement by the government because the market prices are way higher. So to my mind, one of the possible plays during this over the next 6-8 months will be the fact that rural growth will revive stronger than perhaps we have seen in the past. And incrementally, I would argue that rural demand is what is going to drive rather than urban consumer demand. So from that perspective, companies that have leverage in terms of the rural economy is something that I would favor.
Anand, stay with us. Amidst all of the global gloom and doom, India's February trade report once again shows that the country is likely to post a current account surplus this quarter. February services exports are up 37%. Lata is here with more details. Lata, good morning.